This video is for educational purposes only and should not be considered financial advice. Using the TTM histogram with ICT to determine session bias. Intro, the strategy, understanding level 2 in the market maker model, additional notes, and examples. Intro. The TTM histogram is a fantastic tool for identifying the session bias in your trading. By analyzing the size of the waves, it provides insight into the market's directional bias. While tools like the market maker model or Fibonacci series help determine where you are in the price sequence, the TTM histogram offers valuable clues about the trend and optimal entry points. In this video, we'll use the level 2 market maker model as our entry criteria, incorporating the TTM histogram to refine our decisions. The strategy. Here are the components of this trading strategy: the TTM histogram, the ICT market maker model, the ICT Kill Zones, the 1-hour and 5-minute charts. Understanding level 2 in the market maker model. To identify a level 2 structure in an uptrend, we analyze swing levels. A level 1 is formed when a swing high is created, characterized by a candle with a lower high on both its left and right sides, followed by a break of structure. A level 2 emerges when another swing high forms above level 1, meeting the same criteria, a candle with lower highs on both sides, now surpassing the first level. The same is true for a downtrend, just reversed. This is ICT's favorite trade setup because it is a quicker payoff compared to waiting for prolonged price movements to form new levels. Once level 2 is established, there is a higher probability that price will make a rapid move to level 3. Our trading strategy aims to capitalize on this aggressive movement, allowing for a tighter stop loss at the origin point of level 2. Additional notes. For our entry queue, we're looking for a retracement to the 38 to 50% level of level 2. However, we do not enter until price has closed beyond the 5 EMA on the chosen chart. This rule helps us avoid false entries caused by large swings designed to take out liquidity. Sometimes price may not return to the 38 to 50% retracement level before continuing to form level 3. In such cases, we wait for price to retrace back to the 50% level of level 2 and then reverse quickly. These setups often produce some of the most powerful moves within the market maker model. Here are some examples. For our examples, we're going to use this sequence on a 1-hour chart. We can't really see here, but this is a level 1 that was created, and this is a level 2. And when price retraced between the 38 and 50% level, if you would have entered here and put your stop loss here, you would have been taken out. And that's why we wait for price to close above the 5 EMA. This is actually the origin of level 2, but you don't want to put your stop loss that far. So we will go down on a smaller time frame on the 5-minute and see this trade play out. And here we have that trade where price took out that liquidity, and then during the London session created a level 1 entry. We see a swing high created here, and then a second swing high created here. This is level 1, and then once price crosses above the 5 EMA, that is technically our entry. But if we're strictly following ICT rules, we wait until the London session, and then we get that retracement here, and you can enter on this candle that closed above the 5 EMA. Now, if you want to stick to the level 2 entry, we can wait for a level 2 to be created, and then once price closes above the 5 EMA, after hitting the 38 to 50% level, you can enter there. And as you see, you get a nice run to take out this liquidity. Now, one thing to note, which we'll be paying attention to in the next examples, you see this blue histogram. It's very large. And that's what you want to see when you see a retracement from the level 2. You want to see it happening during the trend that you're following. So this is an uptrend, and we have a blue histogram happening right here. This next trade happens after a level 1 and a level 2 on the 1-hour chart. We have a retracement. This only goes to the 38% level. So if you're trading during London, you can actually take advantage of that. But one thing we found, especially with this pair, Euro JPY, the real moves happen during the New York session. So price goes back up and takes out the liquidity of the London session and then moves downward. So this is our level 2. This is our 38 to 50% level. And then during the New York session, we want to look for an entry on a smaller time frame. But as we see, price closes down below the 5-period EMA and gives a large wick. This is that move here. Now we don't get a level 2 entry, and we don't even get a level 1 entry. But if you're confident that price will move to the downside after seeing that large wick and a close below the 5 EMA, you can enter right here. So this lower probability level 2, we're taking our level 2 from the 1-hour chart. And on this 5-minute chart, we see a divergence between the histogram. And it might not be a confident entry because you see a lot of blue histogram activity. But one thing you might take confidence with is that this is a full level 3 move with an extra level 1 and level 2 to take out liquidity. So that might give you confidence to actually enter this trade. But you would only enter when price closed below the 5 EMA. And really, you would only enter after price closed below the 5 EMA on the 1-hour chart. Now, this next day, there's no level 2 entry on a 1-hour chart. However, there is a possible level 2 entry on the 5-minute chart. And since we're in this large orange histogram, we can probably be pretty confident that that trade will pan out. And this is that trade here. We see a divergence on the histogram that would give us pause and might caution us not to enter this trade. But we see, if we do the count, we see level 1, level 2, level 3, and then we see a level 1, a level 2, and this does not close beyond this low. So this is still level 1, and then we have a level 2. And then 38 to 50% retracement here, and this is a possible entry during the New York session to take advantage of this level 3 move. Again, we're during a large orange histogram during the hourly chart, and we see large orange histograms on the 5-minute chart. So you can be pretty confident that with this type of move, you'll see the continuation for the level 3. This move right here is what we were referring to as the most powerful move you'll probably see in the market maker model. As we've seen, this is level 3. Then we have a level 1, a level 2, and then a level 3. And then we get a level 1. And this is where you can look for that retracement to the 38 to 50% level of level 2. Because during this level 2 move, we did not get a retracement to 38 or 50%. It only moved back probably to the 23%, and then continue to the level 3, and then we have a level 1. So after this level 1, price moved back in to touch the 50%, and actually this is the 61.8 level. And then price moved to the downside. And of course, this happened during the New York session. So what can give you confidence that this is going to move to the downside? We have this large orange histogram. We have a small blue histogram happening here. And you probably want to enter once price crosses this 5 EMA. And you see you get a small retracement back in during the beginning of the 9:30 hour. And let's take a look at that trade. Here's that trade where you have a divergence on the blue histogram, the uptrend, and then you have your level 1 created, level 2, and then the retracement to the 38 to 50% level around here. And once price closes below the 5 EMA, you can enter. But watch what happened at 9:30. You had your retracement back to the same entry, and then you move down. On this trade, we see price had already created this level 2 and this level 3, and then it creates a level 1 and then a level 2. And your entry would be here on the 1 hour chart. We're already above the 5 EMA, so this is a very strong trend. And you see on the 1 hour chart, you have this large blue histogram. And the same goes for this trade. So let's take a look at this trade. We see how price had a divergence here during the London session. Then during the pre-New York, it ranged. And we have a level 2 on this 5-minute chart. And price retraced to 38 to 50% during the New York session. You would have entered as you crossed the 5 EMA. Or you can wait for the 1 hour level 2 entry as price hits the 50% level and then closes above the 5 EMA. And then that's your move for the rest of the day. And you have this large blue histogram happening on the 5-minute and on the 1 hour. This level 2 entry happens after price actually took out the origin of level 2. We see we have level 2 here, and then level 3, then we have a level 1 and a level 2. And then the origin of level 2 is right here. But during the pre-New York session, price took out the liquidity and then moved to the upside. So you want to wait for price to close above the 5 EMA. And your entry could have happened here from a 1 hour standpoint. But let's look at the 5-minute. Here is that trade on the 5-minute chart. We see a large divergence during that move in the pre-New York session. Then we see a level 1 and then a level 2 created. And you can enter after this liquidity is taken from the 9:30 session. We see a close above the 5 EMA, a level 2 entry on a 5-minute chart, and a level 2 entry on a 1 hour chart, and a blue histogram with divergence. Price shoots up to the upside. And this is the large blue histogram where that trade is happening. Summary. In summary, the TTM histogram is a great tool for identifying session bias, and when combined with the market maker model, it helps us pinpoint high probability trade setups. By understanding level 2, we can anticipate strong moves toward level 3, giving us a solid edge in a market. The key takeaway: wait for price to retrace to the 38 to 50% level of level 2, but do not jump in too early. Only enter after a close beyond the 5 EMA to avoid liquidity traps. And if price doesn't retrace before moving to level 3, watch for a pullback to the 50% retracement of level 2. These setups often produce the most explosive moves. If you found this video useful, Please hit the like button, subscribe, and drop a comment with your thoughts. Let me know if you traded this setup before or if you have any questions. Thanks for watching, and we'll see you in the next video.